Okay. All right, welcome everybody. We're here for Ticker Talk today. It's Wednesday, September 28th. It's been a good day in the market for everybody, I guess, unless you were short, but I don't think too many people here were short. Hopefully you all had a good day in the market and enjoyed this nice surprise rally that we had. So we're going to take a look at that. Talk about that a little bit. We'll go over the markets, and then we'll get into looking at some of the stocks you guys are into. So let's just dig right into this. So everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All of the statements made here are my own personal opinions and not to be considered advice to buy or sell any security. I'll be able to talk better soon. All trading and investment decisions are your own and done at your own risk. Okay. So, yeah, we're going to take a look at the markets. Like I said, we'll look at some major indices. We'll look at some of the key indices, like, we'll look at the VIX and the 10-year yield and the dollar. We'll look at a couple little breadth measures as well, like some interesting stuff going on there. And then we'll just quickly blast through the sectors, and then we'll see if there's any setups. So let's do that. Okay, so this is the SPY ETF representing the S&P 500. And you can see that, we'll zoom in a little here. You can see that we have spent the last 4 days flirting with these June lows, or this June low. Cut through it yesterday, have closed below that low twice now. Or sorry, it didn't close below the low, but I mean, these were two lower closes than we had back here in June. Okay, so definitely making lower lows, lower closes, not good, right? But when it went through yesterday, it got back up quickly. And today we gapped up a little tiny bit, and then we just ran up all day long. It was a thing of beauty. And however, we were still only able to get above, this 370-ish area. Sort of got into this gap a little bit and pulled back, right? We got to this, actually this accelerated trend line is not drawn correctly. That's better. Got to this accelerated downtrend. Look how steep this downtrend has been. Got up to that and pulled back. So, not perfect. I mean, as good as today was, it would have been kind of nice if we had actually gone and closed this gap and then just closed at the top of the gap. I think that would have been better, or even just slightly above it. So, right now it kind of feels like, all right, so now what? It's really hard to buy this here. And we've got to see follow through. So what we've got here is a potential reversal, a potential bounce, but we've got to follow through tomorrow. If this fails, then we could potentially go much lower, and we've got to kind of look back on the chart here to see where we may end up. And I think that one of the places we probably end up, or first place we can look for resistance, is this 352 level. Not resistance, sorry, for support. We'd be looking for support if we break down through here at 352, and we're probably also going to be looking at around 340 to 342 for support. I actually want to draw that one in right off of this level right here. Yeah, so in around 342 would be our next level if we crash down through 352. So yeah, I think below 362 here, below this support level, it could get really ugly. We either got to come, have a nice good day tomorrow. Maybe we gap up and then continue higher, or even if we gap down a little bit and then move up. But we've got to close this gap, and we really need to close above this gap. And we've got to take this accelerated downtrend out of play here. So follow through tomorrow is really important. Okay, let's look at the NASDAQ. So this is the QQQ. Very similar chart setup. Now, the Nasdaq did not close below those June lows. Didn't even pierce the June lows. Did close the gap, this little gap here, close that today. So actually, we can get rid of that now. But you know, there's still probably a little bit of resistance right here. So same thing, right? We need to see some follow through here. IWM. IWM was by far the strongest index today, up 3.16%. You know, compared to the Nasdaq's 2% and the S&P 500's 2%. So really nice gains in the small caps, and you know, which indicates risk on behavior, right? So again, we came down, tested these June lows, and you know, survived that test, have come up, moved into the gap, almost closed the gap. So you know, stronger, as I just mentioned, than the S&P 500 here. But again, got to continue this and follow through. Let's take a look at the volatility index. So you can see this is really interesting. You know, we only had a small gap down this, we had actually a small gap up this morning, and yet the volatility index gapped up quite a bit. Now the markets were weak in the pre-market. It was not looking pretty. It was looking like we were going to have a fairly decent gap down, but the UK, the Bank of England, said they were going to intervene in their bond market and inject liquidity into the market, because you know, they're having a currency crisis over there, and it's really threatened to become a large-scale financial crisis in the UK. So with them intervening and providing liquidity, once they actually started doing it, so you know, early in the morning in the pre-market here, I don't think they had actually started yet. They had said they were going to do it, and then they started doing it around, you know, just before the open, and then our markets, North American markets, started to rally, European markets started to rally, and then that continued through the day, and the behavior became quite risk on. The U.S. dollars, we'll see in a sec, the dollar index, the U.S. dollars started to come down, and yields in North America also started to come down quite a bit. So just their intervention, the Bank of England's intervention in their own economy, had global effects. You know, we benefited from that today. And we can see that in the VIX in this big red candle here. Now, you know, I was talking about how, you know, if we were going to get capitulation, if maybe what we needed to see was, you know, capitulation in the markets, you know, we needed to see maybe the SPY, you know, crash down through these June lows and then shoot right back up again. And when that happened, that VIX would probably shoot up in this 35 to 38 area. Well, we got to the 35 today, you know, without having any capitulation, although it certainly looked like a day that had the potential for capitulation. And you can see the level we got to goes all the way back to, guess what, those June lows, right? And you know, and in fact, it opened higher than even the highs in the June lows, or around this level, the highs in the June lows. So that was pretty interesting. Of course, this pulled back all day, and it pulled back a lot. And so I want to show you, I've got this little chart set up here so that we can actually go through this and see where we are now in this. So, whoops. All right, I think that's good. Okay, good. If you just sort of follow my cursor here, from the top chart here is the VIX, and the middle chart is the S&P 500. And I want you to see the relationship between these. And let's go back to 2018. And if we look down here at the S&P 500, we can see, you know, we have been going up here, and then we had to move down, and we got into this sideways, and then had a little more down, right? And what I want you to see is, generally, when we have peaks in the VIX, they are very quickly followed by a move up in stocks, in equities, and you know, a move down in the VIX. And you can see that happened right there. You can see that happen there, and this one, you know, turned into a nice, you know, long uptrend. There's another one here. You can see this is the December 2018 when we'd had quite a long period of well, essentially this got into basically bear market territory. The S&P 500 was down 20% or 19.98% or something like that. So essentially 20%. And you know, we had this peak in the VIX. Of course, this is the COVID crash here, and you can see that the low corresponded with a sharp peak in the VIX. You can see any of these, you know, sharp moves down and reversals in the S&P 500 correspond with these moves in the VIX, right? We can see that again in, this should be the June one. Yes, it is. So this peak here was the June low, and you can see peak in the VIX, and we move up. And now it appears that we have another peak in the VIX. It hasn't started to roll over yet, really, you know, on this chart, but we can see when we go back to our daily chart here, we can see that did roll over. That reversed quite nicely. So that will be showing up on this chart now. And we can see that we started to reverse upwards in the S&P 500. So this bodes fairly well for the reversal in the S&P 500 continuing, which is what we really need to see, right? So let's go back to our daily chart here. Let's take a look at the 10-year yield. And we saw a sharp reversal in the 10-year yield, in fact, in all yields today. This had gone over, and you can't see this happened in after hours or something, but the 10-year yield went above 4% last night or this morning, early this morning, and then sharply reversed. We've come back down, you know, we're much closer down to this trend line. If we see, you know, another move down tomorrow, which I hope we do, then we're going to, you know, probably be looking at the 20-day moving average maybe acting as support. So good to see yields coming down and coming down sharply. If we move over and look at the dollar index, we will see that it reversed sharply today as well. Sort of like a little bit of a triple top here. We still have this accelerated uptrend is still very much intact. But, you know, a couple more down days in the dollar index, and we'll break this accelerated downtrend, which we really want to see. Because, you know, equities are not, I've been saying this for ages now, but, you know, equities are not going to go up unless this dollar index is coming down and yields are coming down. The dollar, you know, the equities can handle a little bit of a moderate rise in yields, but not at the same time that the dollar index is going up this steeply. So this is all really good to see. And if we see continuation in, you know, move down in the dollar and in yields, equities will go up. So that's what we want to look for tomorrow. What else did I was going to show you some a couple of breadth. We looked at this on the weekend. So this is the S&P 500 stocks above the 50-day moving average. And you can see the same kind of thing that we saw in VIX happens here. You know, when this gets to extreme readings, it tells us a bottom is very near. And you can see that there's the COVID low there, the June low here, and now yesterday's low. And you can see that we're moving up off that low. More interesting now, you know, so we can see we've got to very extreme readings, and we should expect reversal in the markets there. What's really interesting is how quickly this reversed. So this, what we're looking at now is, this is the percentage of stocks, all stocks, above the 5-day moving average. Now, yesterday, that was at, where are we at here? About 6%. Yesterday, only 6% of stocks were above their 5-day moving average. Today, 66% of stocks are above their 5-day moving average. That's a stunning reversal. And again, something we really need to see. So quite happy to see that. Let's go back over here. We'll take a look at you know, gold had a nice reversal. We're going to see a lot of charts that looks like this, you know, with a, you know, big green candle for today. So that's, you know, that's good to see. Gold even better. Copper reversed nicely. I was quite concerned when copper broke this uptrend line, but it's good to see that is reversed here. The overall commodities index, we've seen a reversal in that today. And that reversal actually started yesterday, printing this inside day, and had a nice gap up today, and it's come right back up to that what was a major support level, and will now be a major resistance level. But we've kind of closed some of this gap. You know, a move further up and through this resistance level would be really, really nice to see tomorrow. Agricultural commodities are still a bit weak. But, you know, in a way, this is good, you know, because if agricultural commodities continue to rise, that's inflationary, makes, you know, increases our food costs and everything. So we don't really want to see that. I'm fine seeing some weakness in the agricultural commodities. So if we take a look at crude oil, which has also been very weak for quite some time now, we're firmly in a downtrend in crude oil. But we've had a nice couple of days of reversal here. You know, this looks to continue higher. Now, you know, I mean, there's a number of reasons for this. There's the tensions, there's the explosion in the pipelines in the North Sea, which is just bizarre. And there's, you know, accusations of sabotage and whatnot. Didn't really hear anything new about that today, but that's definitely something we should probably be following. So there's that, and then the Hurricane Ian in Florida. And if anybody here watching from Florida, well, you're probably not, because I bet you the power is out. But my heart goes out to you guys. I hope everybody's safe. You know, hunker down and be safe. Take care of yourself and your family. And we'll see you back here again soon. But yeah, that hurricane has shut down a lot of the rigs in the Gulf. They're at somewhere, it was about 9% of production coming out of the Gulf of Mexico has been shut down. So that will take a little while to bring back up, and that's one of the reasons that the crude oil is up quite a bit today. Natural gas futures were also up today. They've put in a and still bouncing off this 200-day moving average. You know, trying to reverse in here and go higher. You know, the jury's still out on this, though. This still has work to do. XLE, the energy ETF, that had a very nice reversal today. You can see, though, that it stalled out right at the gap. So obviously, if we're bullish on energy, we want to see that moving into the gap. XOP is the oil producers. And pretty much the same thing here, although this did move quite nicely into the gap. Very strong candle in here today. This was up 6.5%. Very strong move. And the oil services ETF also had a strong day, but it stalled out right at the gap. So if we want to see, you know, the continuation in the energy sector, it continuing to move higher, obviously we've got to see these moving into the gap and closing this gap here. Solar was up, but not anywhere near as much as the dirty energy. But you can see that is moving into the gap and trying to close that. A couple of the stocks we've been looking at in there. Now, we were talking on the weekend about how First Solar is going to need to get back up into this flag area, and you can see that did that quite decisively today. So the next step for First Solar, if you're wanting to find a play here, is for this ideally to consolidate under this resistance for 2, 3, 4 days and then break out. That would be a nice playable breakout and probably lead to a move much higher. And that's in First Solar. Enphase, similar kind of price action here. Although this one you can see supported right where it should, at that bottom of that previous range. This has more work to do, though. We can see that the 21-day moving average is holding price back a little bit right now. But again, this needs to come up to this resistance level up here. Actually, just get that in like this. It needs to come up here, consolidate for a couple of days, and then break out. And that would be playable. All right, consumer discretionary. This sector has been very weak. Not as weak as some sectors, though. You can see, never really got down to these June lows, but still showed quite a bit of weakness, but had the nice reversal today. Industrials, very, very weak. One of the weakest sectors. You can see that this cut through its June and July lows, spent more time down there than any of the indices did. But again, had a nice reversal. Although there's gaps overhead, there's an awful lot of work for this one to do still. Financials. Financials supported right at their July low. Looked like the indices pretty much got a bit of a gap here that it's going to have to fill, as this moves higher, if it moves higher. But nice reversal candle, work to do still. Got to follow through. Schwab is one of the banks that we've been looking at because it's outperforming a lot of the other banks and its sector. And you can see this level of support that we've marked in a while ago, still holding nicely, and we've got a nice move up from there, and we've got the 50-day moving average is acting as support nicely here. So this is looking good. If you're looking to get into one of the financials, or need some investment in there, this is probably worth taking a look at. Technology. Technology was relatively the weakest sector today, believe it or not. Even with, I guess Netflix is not in this sector, I suppose. We'll look at Netflix in a bit, but you can see it looks similar to the index, how we've got this consolidation here between, the support from the June lows and a bit of a resistance overhead. Again, got to make a move higher here. Got to show that this is a real reversal, right? Communications sector. This was, one of the stronger sectors today. This is number 3 in the performance list. And, that has made a nice reversal off these lows. I mean, this thing has just been falling apart, right? So this is a nice strong reversal. And let's see this, continue to move higher. Let's take a look at Facebook or Meta. So Meta, you can see I marked in the COVID low, which we cut through the last couple of days. And good reversal back up out of there. Gained back a couple of days worth of losses, or 3 days worth of losses. So that's nice to see. Like everything else, still got a lot more work to do before I'm convinced that this is a reversal. Apple had a really interesting day. And Apple did put in, a capitulation type candle today. Or Bloomberg reported last night or very early this morning that Apple was cutting back on their production run of the new iPhones because sales weren't there, or orders, the orders weren't coming in as much as expected. And that knocked Apple down quite a bit. You can see that, it opened here, it went quite a bit lower, and then it bounced back up. We should maybe look intraday on that. Let's just change this to a 5-minute chart. It'll be easier to see. So yeah, you can see the, so that's where, the after hours closed yesterday. This is where, so I guess actually the news from Bloomberg must have come out late last night. And here's the pre-market open, and just fell off a cliff basically. Tried to claw back just before the opening, but gave a bunch back here early in the day. Found some support right at around 145, and just ground higher all day long. So that's good to see. That's important, and it was also really nice to see the market rallying so strongly when Apple was looking very, very weak. If we compare, our intraday here to, to the market, to S&P 500, you can see that the S&P 500, I mean, it moved down just a tiny bit on the open, chopped around a little bit and then took off, right? But, compare that to Apple's opening, hour price action. You can see Apple was very weak. So it was very encouraging and a real clue to what was coming for the rest of the day when the S&P 500, when just about every single stock other than Apple was moving up strongly. So Amazon had a pretty decent day, outperformed the market. However, this is a beautiful looking bear flag that it's forming here. So that, that doesn't bode well. It can certainly break out the top of this bear flag and move higher, and as I always say, and I'm not the only one who says this, I stole it from somebody, I'm sure, but from failed moves come fast moves. And that maybe, if Amazon can break out the top of this bear flag, then we probably get a fast move. We should get this resistance level in there. You could easily see a pretty quick, 1-2 day move up into this resistance level here. What you don't want to see is a failure here and then, a couple of bad days, and then it comes out the bottom of this bear flag, because then it will come down and test these, June and July lows back here. Netflix, what a monster move in Netflix today. Netflix was up just over 9%. Huge. Netflix is, you could have actually, if you'd been paying close attention to Netflix and saw it, move through the 21 and 50 day moving averages today, get above Tuesday's high, that would have been a nice clue to get in there. And it gave you intraday, it didn't really give you a ton of chances to get in, but right in here, once it broke through that opening candle there, or even right about here, those would have been two good places to get in. But yeah, just a monster move. From there, it really didn't give a whole lot of entries. Maybe off of one of these pullbacks, but they weren't very deep pullbacks. So, but yeah, beautiful move out of Netflix. Where do you go from here on this? I think that you've got to, if you want to get in this, you've got to hope that it comes up here and consolidates under here for a couple of days and then breaks out, and then you play that breakout. Because how do you buy this after an almost 10% move up in a day? That's a tough one. Google with a decent day, which is really important to see off the lows. I kind of wish this gap had completely filled. You can see that this gap goes way back into early 2021. I wish this had filled completely and then reversed, but we don't always get what we want, right? And maybe it's filled enough now that it can move away from here and start working off some of the supply that it's going to have. Microsoft, another one that was really important to see a reversal because it has just done so poorly lately. But it's put in a nice little consolidation here. It's got to break through this resistance level though. All right, what else we got? Okay, a few more here. Tesla. Tesla's just chopping around in a range right now, but moving its way back up. Doing what Tesla does, right? Semiconductors. Put in the bottom right at the June low. Good to see. But again, like the indices and some of the other sectors, it's got this consolidation that it was unable to break through today. So we really want to see that break out of this consolidation tomorrow. Healthcare, healthcare was up, of course, today. It's one of those days everything was up. And actually speaking of that, literally almost everything was up. Apple was one of the only stocks that was actually red today, even though it had that really nice reversal. And I would say if you've got any stocks in your portfolio that weren't green today, you've got to figure out why. You got to look at those and go, all right, what is wrong with this? Because, almost everything was up. So if it wasn't up, there's probably something wrong with it. All right, let's look at biotech, because biotech had a huge day. You may or may not have heard that before the open, Biogen released some results of a trial on an Alzheimer's drug, and the results actually look really good. Now, there are no Alzheimer's drug. Nobody's been successful in finding something that works, and every time news comes out about something that does work, it has turned out to be false. It didn't. I see Brandon. Oh, hey, Brandon. Yeah, I mean, you could probably fill us in more on this. I mean, this is your area of expertise, or maybe not. You know what I mean. Yeah, I mean, these drugs have always failed. They've gone into the next phase of trials and just failed. So usually when we see, actually, we should probably look at Biogen. What normally happens with these, you get these giant moves up, and you can see the gap here in this, right? And they normally pull back a lot. And we can see that that has previously happened with Biogen a number of times, okay? Here's one here. I don't know what the news was, but you have this massive move up, and then it came down a little bit per day, and then it gapped down. And you can see we had another one of these back in June of last year. Giant move up, and then just gave it all back. So this apparently, I was talking earlier to somebody who knows a little bit about this stuff, and he was quite hopeful about this one. He said he looked at the results, and this one looked like the real deal. So that was quite interesting. But I think we could probably expect Biogen to, pull back some more here. This is an awfully big gap. But back to XBI. So this giant gap up, Biogen's up, what, 40% at the close. That took XBI, which we had been quite bearish on, and that gapped that up a lot. So XBI, the ETF, was up just over 5% today. Now, we have been watching, as you know, if you watched the weekend video, we've been watching this head and shoulders here, and we were targeting this 67 area. And it never really gave us a decent entry there. I mentioned an options play that we could get into. So obviously all of that's gone out the window. Now, it does get interesting here, though, because you can see that we've come right up to the breakout zone or the breakdown zone for that head and shoulders. And you often see that, you'll get a breakout from a head or breakdown from a head and shoulders, and then you move back up and you'll test that neckline and often fail there again. So we should keep an eye on this. If Biogen comes down tomorrow, then XBI, the biotech ETF, will probably come down too. And this could give us a decent entry to get short on this. However, if the market is rallying tomorrow, even halfway what it did today, I suspect that this will continue up. So, and we don't want to be fighting that. If the market is showing weakness tomorrow, then this might be a good play. Shorting this, getting into an options play on this, finding an inverse ETF on biotech, for instance, LABU is a really good inverse ETF to use when you're bearish on biotech. This is a 3 times ETF. I've got to remember that. So this is going to move 3 times as much as XBI. But yeah, this can make really nice moves, if you've got good reason to believe that the biotech might be going down. Conversely, LABU is the bullish version of that. So there's something to watch for in biotech. Let's take a look at REITs really quickly. REITs have just been doing terribly, but are showing a potential reversal candle today. Staples, also not doing well, but they stopped and reversed, or potentially reversing at the June low. And finally, utilities. These have had also huge moves down and potentially reversing here. And you know, these last three that we looked at, REITs, staples, and utilities, not too concerned that you know, these are hanging out down near recent lows. That these have had strong pullbacks, because these are also signs. This is also signs of capitulation. You know, these are our defensive stocks, right? These are always the last ones to let go. These are always the last ones to put in their lows when the market is bottoming, or when a bear market is bottoming. So that these have showed relative weakness over the last, you know, week or two, or a couple of weeks, I think is good. You know, I think that's potentially a sign of a bottom as well. So that is that's the markets. Sorry that took so long, but there's been a lot going on, right? So we can now. I've got to, in case I forget, I've got a few tickers that people asked for. We'll get to those later. I'll get into the tickers of everybody who's kind of here live. But if I forget, somebody remind me if to go over these other tickers. So let's take a look at yours. So you guys know the deal. You can unmute, you can type them into the chat, or you can unmute. It's handy if you let me know what you're thinking about, you know, with a particular stock. So yeah, everybody, yeah, go ahead, type those in, or unmute yourself and let me know what you're looking at. Does anybody have anything they want to look at? If okay, if you guys don't have anything, then I'll go back to.
I could go, Kevin.
Okay, cool.
So I'm still looking at WWE. I brought it up last time, or a couple weeks ago.
Okay.
And
oh, sorry, what was that again?
WWE.
Oh yeah. Okay. Okay, it's still in this range.
Yeah. And I was just wondering, like, I don't know what to think of that, like, little consolidation that it's kind of in right now. Like the last 2 days, like, wick down pretty heavily.
Yeah, this is like,
and I don't know what to think of it. Like, is this like rounding to the bottom sort of pattern, or I don't know.
I mean, it looks a little toppy.
Yeah.
So, you know, I mean, look, you know, discounting today, right?
Yeah.
This doesn't look that bad. When you compare this to what the market has done, this looks great, right?
Right.
However, when we bring today into it, then that really kind of changes things, because, you know, when you see these big wicks on top of the candle, you know, you got the body of the candle here, and then that big wick. And exactly, Marvin just said, is that a gravestone doji? And yes, this today is a gravestone doji. And you know, that sounds ominous, and it sounds ominous because it's a bearish candle. You know, these wicks on top we call selling wicks. So, you know, it tried to go up and it found sellers, and they sold, and it pushed it back down. And that's the same reason that, you know, in Japanese candlesticks, they call it a gravestone doji, because, you know, it went up, sellers came in, were more powerful than the buyers, and pushed it right back down again. So that this action this last 2 days is not bullish. Now, conversely, you know, when we've got these wicks below the body of the candle, that is bullish. So we've had kind of like, we've had this consolidation up near highs, right on a trend line. And, we've got some as bullish as this can be without actually putting in higher highs, right?
Right.
Bullish price action going on in here. We see increasing volume on these green candles. The problem is it's not going anywhere.
Yeah.
Which is bearish. So
Yeah.
I think, if you're looking at, because you're in this now, right? Or did you?
Yeah, I'm in it. I'm not I'm in it and I'm in the red right now. But not crazy. And I'm like, maybe now's the time to stop out before, it goes I lose a little bit more, That's what I'm thinking.
Well,
it's just below, it's just below where I bought it, which is at like 60, like around like 68, 69 and some change.
Okay. Yeah, so
let me just pull up my portfolio so I can give you the exact price. Yeah, I'm in it at 69.09.
Okay.
Yeah.
I don't know. Is this an investment or a swing trade?
I was thinking of it as a swing trade. It was just more of like, because it was kind of bouncing back and forth in this channel. And I thought maybe if you look back, those 3 candles that were kind of shooting up,
yeah,
that's when I got in, hoping that it would go up. And of course, 2 days later.
Well, sure. Why not, right? That looks like a breakout. You've got, and it was. It broke out for a day.
Yeah.
And then it gave it back, right? So, and it's having trouble getting out through that level again. But it's also, it's not really breaking down either. It sucks to be selling or stopping yourself out kind of in the middle of a consolidation. This level, these 3 lows right here, break below those.
Okay.
It's probably better confirmation that this isn't working. However, it might just go down there and it might poke out down through there and then right back up again, right?
Right.
It's almost like you want to see it close below these.
Okay.
Then you're starting to give a lot back. Because then you're probably looking at, okay, so say 66, right? So that's like $3 away from here.
Yeah.
You don't want that much back. If you're worried about, if you were in it, I think you said 69.70 or something?
69.09.
69.09, okay.
Yeah.
So you've got a very tiny loss on that so far.
Yeah.
But, if you're worried about that much loss, you're really going to hate that much loss, right?
Yeah. I'm not too worried about it. It's just, I just don't, it's kind of what you said. I am afraid that it might touch that bottom and just kind of shoot right back up.
Yeah.
And I don't know if it's worth the wait, but
right.
I could take the loss and just wait for that confirmation.
Yeah, you could actually, and maybe tomorrow morning, as long as we don't, I can see that the futures are actually down a little bit, but that doesn't even matter really. Actually, what is this doing after hours, if anything?
I don't think it does much.
This doesn't even ever trade after hours, does it? Yeah, so it's not doing anything at all. Wow, see, look at that. It's a serious seller.
Yeah, it just sold so hard. I was watching the 5-minute today and I was like, oh, dang. I think that's what kind of like gave me the red flag too. Just kind of the intensity of the selling was like, whoa.
So, if you look at, and you look at the volume here, right? You have this really strong move up, but on relatively light volume compared to this selling. There's a lot of volume on that selling.
Yeah.
On the upside, it came down, it tagged the open, and then the buyers came in. And they saved it. And this seller was done by then. So maybe this is just somebody who was wanting to get out of this position. And it did almost exactly the same thing the day before.
Yeah.
Yeah, this is like a fund, or this has got to be a fund. getting out of this. And they maybe, you know, I mean, this could very well be some kind of manipulation, you know, where they're buying a bit in here to get this thing moving, give it some momentum to get it up here, and then they just come in and go boom, they sell. Yeah. See, but the day before that was fine.
Yeah.
But there was strong selling on this day. Yeah, this is weird the way these sellers come into this thing. So, yeah, if this seller isn't done, then yeah, you're probably in trouble.
Okay. Okay.
And you're not going to know if the seller's done or not. You start seeing this again intraday. But now, if it does this again tomorrow, if it's anytime it starts pulling back and it has like one big red candle, everybody's going to think that big seller is back and probably panic, right? So it is a bit of a tough call.
Okay. I mean, I was leaning towards like letting it give me more of a confirmation towards the downside. I was just trying to see if you saw anything that, you know, I couldn't see. But I think that's what I'll do. I'll just stick it out. You know, I don't have like a lot of money in it.
Yeah.
Anyways, you know, so
yeah. And you could look to the low of this candle, Tuesday's candle, maybe as well.
Okay.
Or you could look at the intraday price action. You know, if it opens and shoots up again and that seller comes back, watch what happens. Watch the price action around the opening price, right? Like how it bounced there. What did it do the day before? It didn't go that far below the open the day before it bounced back. In fact, you know, when it came down, it did consolidate a bit above the opening price. And it took a little while before that went down below that open and the opening range low. So, yeah, I mean, it looks like a sort of a well-behaved seller who's trying not to kill the stock entirely, and it looks like they're kind of trying to push it up before they, you know, they come in and sell it.
So you're saying that's the same person? Or
it looks that way, yeah.
Seller possibly. Okay.
Yeah.
Interesting.
So the problem is you don't know how much stock they have.
Right. Right.
You know, if they've decided that they don't want this anymore, you know, do they have 1 million shares, 2 million shares, 3 million? You know, you know, what's our average volume on this is 711,000. If they have 3 million shares, you know, that's many days worth of average volume for them to get out of there, right?
Right, right.
So, you know, it could take weeks if they're really well behaved. And there's no reason. I'm not seeing anything that says they're not fairly well behaved so far. You know, and they're not panicking out of it really. It just seems like they're being a little aggressive intraday. You know, so they could probably do better if they weren't so aggressive.
Well, cool. I appreciate it.
Watch it closely if you can. I
will.
Through the day, or set alerts. You know,
yeah.
Because I know you're a busy guy. You've got other things to do as well.
Yeah. So. Well, I've actually, you know, you've told me to be more active, and I have been more active on watching the charts. So,
cool.
Yeah, man.
Good.
And then I don't know if anyone else is interested in BABA, but I still have a position in BABA. Don't want to take too much of everyone's time, though.
Yeah. Yeah, well, it's cool, and I'm sure there are plenty of people either here now or watching the recording who are interested in BABA. And look at that beautiful bullish engulfing candle that we have on BABA today. So this is engulfing 3 days of consolidation price action, much like the indices that we were and some of the sectors we were looking at earlier. Though it's basically just gone up to resistance and stalled out there. We need to see continuation. But that's a really nice looking candle. That's up 4% today. So that's you know, that's double what the S&P 500 did. What's the beta on the beta? Oh, right. I can't find it. I've got beta on one of these charts. No, anyway, it doesn't matter. I'm sure the beta is much higher than the S&P. Anyway, so yeah, good looking candle here. Is this the bottom? Is it ever the bottom? I don't know, man. you know, every time I think there's a bottom, you know, it just goes lower. But good reversal there. And, you know, and above, stayed above this March low this time down, but, you know, couldn't stay above the May low. Or there, I guess, you know, I mean, really kind of, it did kind of reverse in the area of that May low. What do we got? Anything down here? Yeah, that's okay. So this level, these levels in here go all the way back to this consolidation back in 2016. All right, let's get that in. Okay. Wow. Yeah, we really need to see this stuff hold.
Yeah. Well, my concern for this one is, so I'm actually, I have a pretty big position in this one,
Okay.
and I'm in it at on an average of like 110.
Ooh, okay.
Yeah, and you know, once it hit 90, I was like considering, like once it kept dropping, I was considering like closing my position and then jumping back in later, but
Yeah.
kind of just ran away from me. And now we find ourselves where we are today, and I'm like, I don't know if I'm like down to power through a little bit more downside, I guess, you know, even though it's a long-term position. So I'm kind of torn, you know.
I know. I mean, I've got a position here in BIIB, but it's small. Oh yeah, right. Yeah, the 5-year Congress coming up.
And I know someone mentioned in the last year talk, I think it was Ken, about the 15th or the 14th of October being significant.
Right. Yeah, that's that note. I put a note in here about that. So yeah, it's sort of like, that's when we were, you know, or one of the theses we have for this is that this is, you know, this could be the big reversal for it, right? That once we get past that 5-year Congress, that a lot of these Chinese stocks could reverse, and the government's going to be friendlier and all of that. If we come out of that, I guess, and these Chinese stocks are, you know, still continuing lower, then maybe that is the line in the sand, and we have to exit these things.
Okay.
But for now, it's hanging in, right?
It is. I was really happy to see that today.
Yeah, and it did have that really nice day today. All right, cool. Okay, so we got some more on the list here. We got Casey Dodds has looking at Take Two, TTWO, been holding for a while, not sure what to do, add, hold, or cut. I suspect Take Two, like everything else in the market, has probably come down a lot. That's interesting. This drop over the last few days kind of really gave this up, didn't it? That's too bad. So I put a line in here. This is really kind of a zone of, or was a zone of support. And it's really too bad that it broke through there. Does that look like it was going to help? This is a nice consolidation, built a really nice base here, and then that base failed. Similar in a way to how this failed back in May. And it did eventually pop right back up. And start looking all right again. And this price action here looks very similar to this price action here. So, you know, good reversal today. And even started to kind of reverse. You can see that, you know, I mean, this has the buying wicks, right? It decided that this was a level it didn't want to go any lower than. So that's pretty positive. So let's get that in. And again, this stock though is very wicky. So we've got to, like, when we look at support and resistance areas, we've got to think of them as zones. Okay. So next step for this, and like I've been saying with, you know, everything we've been looking at today, you know, this is potential reversal here. We need to see follow through. This has got to move up. And the quicker this can get back up, you know, above this 118 area, the better. And start picking off these moving averages again. You know, all the moving averages are overhead and declining, so that's not good. You know, this isn't a long-term downtrend. So, you know, you've come this far with this. these support areas line up with, going back, way back into 2017, right? Areas of support back here. This is an excellent base, and it is acting as support again. I think this area is the bottom. And it's really trying to move up from here. So cutting it, I would say no. You've hung in this long. You should probably continue. And this is not investment advice, of course, but I don't see why you wouldn't continue hanging on in this. Adding to it, I don't know. I really don't think you want to average down on this, down in here anyway. Maybe when it breaks out of this this previous consolidation up in here. So I mean, let's take a look at the top of this. Where do we define, sort of the top of that range? Probably gets defined somewhere in around here and around this 132 level. If it came back up and it gave you a decent setup in around here, that might be the time to add. If you're really aggressive, and we had a consolidation down in here and then it broke up through that could be a super aggressive add, but I don't know. I wouldn't recommend it. I think you're better adding up in here if you're going to add. And again, only if there's a good setup, a nice consolidation or something, and then break out from it. Problem is, I mean, you can see how many times this thing, tried to break out of this area and failed. But that was the market. That was the market at the time too. Breakouts were just failing everywhere. They just didn't work. So you also want to be in an environment where a breakout's going to work. Yeah, I mean, this is now obviously down an awful long way, and I got a lot of work and recovery to do. But I think it will work. I think it will recover. So hopefully that's helpful, Casey. Okay, let's move on. Marvin. Oh, okay. Yeah, talking about that. Oh, Casey Dot says, also curious what you're doing with Square. Crossing my fingers. This is another one, where it's just kind of, God, look at it. Even I got trapped in a lot of these things, right? These were long-term investments for me, and I didn't want to sell out when I kind of knew better. I didn't want to be the trader in these things, right? And when these were coming down, and I was looking at support breaking and trend lines breaking and all of that, I kept telling myself, no, I'm an investor. I'm in this for the long term. This is an excellent stock, 5 to 10 years. I just got to hang on. Now, if I had known it was going to come down this far, I absolutely would have gotten out. But I mean, how were we to know that things were going to get this bad for it? So the question is, would I add at a certain level? And it's kind of the same thing as with Take Two. I really don't want to be adding down here. Let's go way back. Yeah, and again, you can see the base. This is the TA on this is almost exactly the same as Take Two, right? This formed a big base. COVID, came down through there a little bit, but we're finding, or for now anyway, what looks like support at the bottom of this base. Let's get the lines in going back. In this space, we've got support coming off of that right there. We've got the top of the base, which is around here. So you can see that consolidation clearly. And again, we're consolidating in that same place here. Now look how nicely we broke out of the consolidation before. This is what I'm expecting to happen again. But just like with Take Two, I don't want to be adding in the middle of the consolidation. I want to add when we get a real breakout. And that means I have to wait and pay a lot more. I'm not going to be adding at 60. I'm going to be adding at 90. But by the time it gets there and sets up a nice pattern, it's proven that it's ready to go. And by then, the market has proven that it's ready to go. So yeah, this is everything in here is no man's land, you know, up until 83 or 90. It's all no man's land to me. It's all inside of consolidation. I just don't want to play in there. Does that make sense? Hopefully that makes sense. But I'm hanging on. I'm hanging on a square. It's a long-term investment. You know, there's no way I'm selling it now, down, you know, way down here, right? You know, I'd probably ride this thing all the way to zero if that's what it came to at this point. But again, you know, it's not a. I don't have make or break position sizing on this. If you do have, you know, make or break position sizing, if you can't afford this going to zero, then you know you probably should consider. You probably should consider selling out if it breaks down much lower than this. So Casey Dawes says, yes, thanks, but I'm curious, who are the buyers in these no man land levels? Yeah, that's a good question. It's hard to say because it's probably not, you know, I mean, if this consolidates down here for a while, yeah, actually, this is you know, this is a good question because you bring up a good point. And something that would change how I might play this. Let's say this consolidates for many months down here, okay? That would suggest to me that this is, you know, there is institutional buying in here. And there are other clues we can look at. Maybe I need to do a whole session one day on what does that sort of institutional buying look like, right? But what happens when institutions want to take a large position in something? They're really well behaved, and what they'll do is they'll quietly start buying. They'll buy, and it gets up and around here, and they're like, okay, we don't want this going any higher, and maybe retail starts getting excited in here, and they will sell some of the shares they bought, and they'll sell them suddenly to knock this back down. And then we get back down here at 55, and they start buying again. And it starts going up, and it slowly starts to climb up, and they get up to the, you know, the 65 or 70 level, and it's like, okay, they sell some more. And they do this over and over. And if you want to research this yourself, this is sort of what I'm describing is very much Wyckoff price action. Wyckoff is a guy who described this in great detail. And has come up with a number of different price actions. They're very similar, or price charts that are very similar, and they start off looking like this did back here. And it could be an entire structure. It could be huge. The structure could look like this, right? This whole structure in here is Wyckofian. And this could all be institutional buying, but I think that it should be tighter than that. This is too wide a range in here. And I suspect that if institutions started buying, they would do it in a tighter range down here, but they try and keep the price down near these lows. And eventually, they're going to let it break out. And they will do some buying here to get the breakout going and get some momentum going. And then retail gets involved and everybody gets involved. And then we're into that part of the cycle where this just goes up, up, and up. And if we look back on Square, that's what all of this was, you know. We had this big move up, and then it just consolidated for a long time. And this may very well have been institutional buying. COVID kind of wrecked that. And then we had the nice move up. And then the institutions up in here start selling. So that is a long answer to your question. Who would be the buyers in these consolidations? Generally, it's institutional. All right. So Ken has asked for, oh, you're welcome, Casey. Ken has asked for AMD. Yes, big downtrend. So this broke that July low, eh? I haven't looked at this for a few days. Let's get this support level in here, which it broke through a few times. And then we got a bunch of gaps from over here. Let's get that one in down there. All right. So you can see the see this giant gap in price action, right? I think everybody knows that this shaded area is volume of price. So that shows us how much volume was done. Rather than, vertically here, how much volume was done on a given day, this shows us how much volume was done at a given price. And you can see this area that we are right in the middle of now has seen virtually no volume compared to other areas, right? And what happens often is that price move down through those areas quickly because there's no memory in there. We might have a little bit of memory right about here where we seem to be finding some support. But that might be because it has consolidated in here for a few days, and that's the volume we're seeing showing up here, right? So a little scary that it's hanging out in this zone because it could, in my opinion, very easily drop from here. Where are we now? Around 67, 68. Drop down to this 58 area quite quickly, and maybe not even support there. Maybe it doesn't support until a little bit later on, until even into the 55 area. So that's the bigger picture on that. But in the short term, we've got a nice little consolidation, and it's building a nice little base. We want to see it break out of that quickly, though, don't we? So. How long is it going to stay here? As long as it's inside this base, everything's okay. A breakout below that probably leads to fairly quick downside, and a breakout above will take us up into this 74, 75 resistance area. Maybe it can get right through that. Maybe it has to consolidate a little bit underneath it first before it gets through. But we've still got firmly in a downtrend here. Below all the moving averages. It's not looking great for AMD. I think that if you like, I know that AMD is a little different than most of the semiconductors. It's comparable with Intel, of course, but there are other semiconductor stocks that I think are in better shape than this. If you're looking for somewhere to go. Ken, you were here at the beginning when I was talking about, or I guess I only talked briefly about the semiconductor space. But happy to see it bounce. Happy to see it bounce, off those June lows. Mm-hmm. But again, there's weakness below. A break below, these lows. If this fails. Pretty much, almost a guarantee down to, down to 180, even 175, on the ETF. It's just been such a weak space, and I don't think it's ready yet.
Okay, got it.
I think you should be patient.
Yeah, and at the same time with the macro environment as well, right? I know there's a lot of things that are going on right now in the semiconductor space, like between the US and China.
Yeah.
Okay.
I know when we have a day for like today, it gets the juices flowing, and you're looking for you're looking for opportunities, and that's awesome. That's great. But it's scary. It's very risky looking for opportunities on things like this when we're down at these lows like this. Because there's a lot of risk there. I'd rather be looking for opportunities than something that is showing strength.
Got it.
Cool.
Thanks, Kevin.
Actually, when we look at the semis that have been showing strength, they're even not awesome, right? On semiconductor had been doing fairly well. It's holding up near these highs, but it's not really moving up a whole lot either, right?
Yeah.
It's just kind of going sideways. And another one that outperformed everything is this PI. When semiconductors were falling apart, right? Remember with the semiconductor, look at this area here between May and August. And then you look at SMH. Between May and August, or actually well, between May and July, this was, going down. It did bounce as we got into July, into the middle of August. But back to PI, look how strong this has been. And then, this started to come apart, especially in the last week. Now it's bouncing up from there, but really this is a bit of a bear flag here. So, we would expect to see this, continue on to the downside. So, yeah, I'm not convinced that this is the right time for this space.
Got it. Okay, thanks.
Cool, you're welcome. So that was that. All right, I'm gonna go move on to. So I've got a couple here for Rushi in the Discord, and the first one is Metropolitan Bank. So financials, I know we looked at this earlier, but I just want to take another look here. Right. Financials are another one of these sectors that, really playing with these lows and gotta bounce off these lows, or bad things, could happen. And there's a lot of kind of dead air in here. And these could move down quite a bit further. And if financials start crashing down into here, into this 25 area, that's really going to start freaking the market out. That would not be good at all. So we want to see if financials hold on. Do we want to be buying any financials right now, though? Where did that one go? What was that? MC? Yeah, here we go. So this is, slightly outperforming. It didn't get down to these July lows yet. It's having the same kind of day that everything else did. But I'm not seeing anything here that's telling me I want to buy this. We've got this short-term downtrend, in a long-term downtrend. Let's get that one in there as well. All the moving averages except the 50-day moving average are declining. They're all overhead still. So yeah, firmly in a downtrend. This one, like a lot of stocks we've looked at, has a lot of work to do to prove that it has bottomed, and that takes time. So I don't think there's any reason to be getting yourself involved with this. If you're really sold in the financial space, I think there are better options than this one. Visa is something that maybe, even though this looks terrible, it has come down so quickly and had, what is almost capitulation here. This is something I'd be more interested in if it got back up into this area and get back above its moving averages. But something that is showing relative strength is something like Schwab. You can see this is nowhere near those June and July lows. It had put it in a fairly decent base here. Got up to an area where it found some resistance, got through it, and then that resistance has become support. This is something that if I really had to be in the financial space, this is one that I would be interested in being in. All right, so the next one. So the next one we have discussed. I'm quite interested in this as well. We've discussed this quite a bit in the Discord over the last few days, and that is INMD. The fundamentals on this thing are excellent. All its fundamental metrics are just outstanding. I can't figure out why this has come down so much. It just seems like a really good company that's firing on all cylinders. And obviously it got way overvalued, and maybe it's come down now to an area where this is maybe this is fair value here. But I'm looking for opportunities to get in this. We were looking at this consolidation and thinking this is an opportunity. This bit of a breakout over the last few days definitely looks good. But we've still got, a fair bit of potential resistance overhead, which it should be drawing in here. somewhere in around there. Probably over here too, when this is on the way back up. Yeah. So yeah, I like this one. And I want to try and find, start nibbling on this and start building a position in this. Just I'm not seeing like a really nice setup yet though. But I have a feeling, it might miss the boat. This might start to go. So yeah, definitely worth watching. Check out the fundamentals on this because I think you'll like what you see. I certainly like what I saw in there. Okay, and for NS, he wanted to look at cybersecurity. So this is CIBR. This is the cybersecurity ETF that does the most volume. And I try, and when I'm looking at these, I want to look at the one that does the most volume. Hack is another one. I think more people know about Hack. Just I guess because it's got a better name, right? But Hack only does about 1/5 of the volume of this one. Okay, so let's see what we've got here. So we've got some, let's get that level in there. Kind of got a level here maybe. That consolidation over there. I kind of like that from there. Okay. And then this one. Oops. There we go. Right after that. Whoops. Okay. All right, cool. So, do I need to put on a lower one? Yeah, probably should. This level. All right, good. Okay. So you can see we've got, a lot of nice levels from the past. We had a pretty decent consolidation here back in, when was this? Late 2020. And then it broke out of there, consolidated again, went higher. So, this stair stepped up. That's nice. That's what you want to see. But it has rolled over, of course, as everything else has. And, it's got accelerated downtrends. However, it did support on this June low. So let's see, let's get some trend lines on this. See if we can see anything with those. There's that one there, of course. This one here, probably the more important trend line. And you can see that, we're really kind of accelerating these trend lines, or this has been accelerating to the downside recently, and gotten quite steep, like everything else has, right? And gotten too steep. So it was due for a bounce, and it bounced, right where it should off of that June low. Will this continue higher? It's drawing a bear flag, right? So that's a concern. But this so far looks like a bit of a reversal and had a really nice candle today. If the market continues to reverse tomorrow, then this will go up as well. We got to look and see what happens when we get into this resistance level and these downtrends. So that's the ETF that represents the sector. It's it's been messy, but I think it's probably outperformed something like the Qs. Let's actually go over to our relative strength. Let's go CIBR. See how this is done relative. Well, I might as well do it relative to SPY. We've got the SPY chart on here as well. Oops. SPY. Okay. So this has been, sort of over the longer term, this has outperformed SPY, but recently is not outperforming SPY. Let's take a look at this compared. Oh, this is on a weekly. We should be looking at a daily. Yeah, definitely over the last year, underperforming SPY. If this were outperforming SPY, this chart at the bottom would be going up. Okay. So how is it done though against the Qs, right? We should be looking at this against tech. I suspect it's outperformed tech. No, not really. Okay. So not great. But you know, it's not losing to tech either, right? Or at least not in the last, 5 months. Now, one of the leaders in the space is CrowdStrike. So why don't we compare CrowdStrike to the Qs? And again, I was kind of expecting to see outperformance here, and I'm not really seeing it. But you can see where we have had periods of really nice, strong outperformance. So no reason to think that we can't see that again, right? Let's go to a daily chart of CrowdStrike, and so yeah, I mean, this doesn't look as bad as some things have looked. It hasn't come down to these May lows. The June low in this one was actually a higher low, which was cool. And we didn't even come down as low as that. So we've made another potentially higher low here. We're going to need to make a higher high to confirm that that's a higher low than this low and that low. So yeah, I mean, this looks like the beginning of a decent reversal, off an area where it probably should have. Let's go back to, okay. All right. Yeah, I'm kind of liking what I'm seeing. I hate that it's come back this much. And we're still firmly in a downtrend. We're below all the moving averages. They're all declining still. But this has been trying to break out of this, basically. Go. We need to get up and attack this trend line. You can see that this trend line has really been holding it back. So as we get up here, we need to get through that, and then get through these two little highs here. But this is a good start on that, right? And like I said, this is making higher lows here. This had been in a nice uptrend, and just got whacked on the latest move down in the markets, which isn't a surprise. Okay. So, has anybody else got anything they want to look at? I don't think I haven't seen anything from Eli. If there's anything you're interested in, we could look at another one. And if not, that's all cool too. I think then we're going to call it a day. So, what do we got coming up? Oh, I need to do a new calendar because yeah, Marvin, we can get to that. Oh, we've got Eli wants TTD, and we'll get yours too. So we'll get to that.
Oh no, I was just pointing out that Eli had TTD in the chat for you.
Okay, thanks, Marvin.
Yeah, yeah. I'm just slowly getting back into stuff because I feel like I've been away just hammering at work stuff. So I'm like,
okay. I've noticed you haven't been here for a little while. I've been missing you.
Yeah. I went out of the country and then I got back and like I was like supposed to be moving and then that kind of had a little setback with that. So I just kind of recalibrate.
Yeah. I get it. I mean, and when you've got all that other stuff going on, looking at your investments or trading is definitely, it's good to take a break from it because you need to be in the right mindset.
Yeah, for sure.
You've been focused elsewhere.
Yeah, and it's been a good break. And then I was like, dang, I kind of missed this. And then I think I looked at a chart maybe yesterday or day before yesterday, AMD actually, and I was like, dang, should have played some puts on it a couple of days ago. But but so slowly getting back into it. But good
that's cool though. I mean, sometimes you need to step away for a little bit.
Yeah.
Because it can get a little frustrating.
True.
And you can wonder, what are you doing, and should I be doing this? And a little step away can refresh you, right?
Right.
And then coming back, it can, yeah, it's just good sometimes. I wish I was able to step away a little bit sometimes. I do try and take maybe a little long weekend, a 4-day weekend or something here and there, to step away and try not to look at the markets too much when I'm doing that. But it's hard when for me it's a full-time job. This is how I make my living, so I kind of have to be here, paying attention all the time. But no, those breaks are good.
Yeah, no, appreciate it. Appreciate that for sure.
Cool. Well, good. Next week, then, for next week's ticker talk, I'll be looking forward to looking at a couple more tickers for you.
Yeah, that works. I'm like I said, yeah, I at least have one chart for you. I have something drawn up, I'm sure.
Yes, that's right too. Because just before you went away, when we started doing that, we were getting people to, and I forgot to kind of continue that in your absence. Getting people to show the charts that they've drawn up. That was a great idea that you had, and I really like doing that. So
yeah, I'll make sure I start it back for sure. So I got you next week.
Okay, sweet. All right, nice chatting again. So let's get into Eli's ticker trade desk. First thing, obviously, got to get in that support level right there, right? Out there, pretty much bang on $40 on that support level. There's another nice level right in here. Has acted fairly well. So that, and I guess that's off of the June low, right? Essentially, that one's more a bit of a zone, because it comes, it's from 51 to 50 basically is the support zone there. I haven't looked at, wow, that's a beautiful uptrend that unfortunately broke. When did this start? Okay, 2016. Well, that's interesting, isn't it? Okay, I'm gonna zoom in here. I want to make sure I get these bang on here. There. One there. All right. Yeah, okay. So we've got this super long-term trend line, basically for the life of the stock. We're still above that. That is holding. But we've got kind of an accelerated trend that has broken. Let's get that one in. So that'd be there. Is that our COVID low? Yes, it is. So yeah, so it broke down below the, if we take a trend line from here, or even if we, yeah. Wait a minute. Missed. There it is. Okay. I've been finding that actual low, there was another low, and that low has been working a lot better for trends on a lot of stocks. So I wonder how that one kind of played out. Yeah, I like that better. See how it's supported there. All right. So so the super long-term trend line, we're still above. That's great. That other sort of modified trend line, we broke below that. We had a lot of warning in here, with this consolidation, very big toppy pattern, but we are, trying to build bases in here. This is trying to recover from here. So I think that we're going to see some chop in here, but I think that we're going to see recovery in this before it goes any lower. And I wouldn't be at all surprised if this March low here, this 50 to 51 area, supports on any pullback in the market. I don't like the way this is in a bit of a down channel right now, but this has reversed nicely, and it has shown relative strength to the market over the last week, and had a really good day today. So this looks like it wants to come and attack this 200-day moving average and get above it. If it can get above it there and spend more than a week or two above, then I think we're golden on this. So are you looking to, oh, good. Yeah, Eli says, looking to get into it again in the, again, into the 50s. Well, ideally you don't see the 50s again. I think we've got, actually, there's another support level we should probably get in here. Kind of keys off of that one right there. Yeah, I mean, this, in a perfect world, this does not even go below 55 again. But I'm really surprised if this goes below 50, and it may not turn back now. It might, this might be the beginning of move up, retake that other trend, or it might stall out. You really kind of, yeah. Marvin says, although it's in a downtrend, it definitely is filling that gap. Are you talking about this gap here, which would basically been filled, or which gap are you talking about, Marvin? Yeah, I'm just looking for strength at this point. Yeah, Eli says,
that was the one. That was the one. I was like, it looks like it's in a slight downtrend. I was thinking the same thing, but I was like, wow, yeah, definitely fill that gap for sure. Quick.
Probably actually just to to clarify all of this. This is the downtrend we're talking about, and so actually I'm going to do, because this trend tool does this perfectly. If we nail the high off of that and that, okay. So you can see the downtrend really clearly now, and we've got from here we've got 1, 2, and now so we've got the the 2 touches on that, and now today breaking out through there. So look, I mean, there's one school of thought that says, okay, we've got a bunch of resistance right around here. This should fail here, and that's absolutely a possibility. In a perfect world, what we'd like to see is perhaps after a big day like we just had, and with let me straighten that out. With that downtrend line, with this 2-day moving average right here, it would probably be cool to see this form a bull flag right in here now. So that would look something like, and maybe a nice tight one, right? So maybe it goes up again tomorrow, gets to this level, and then gives us 3-4 days of tight consolidation that looks somewhere in this area here, and then you buy the break out of that, and that's where you restart your position. Because if it did something like that, that's a pattern I would buy for sure. Lots of traders would jump on that. Day traders would get in there on the day it breaks out. So you'd have a bunch of different kinds of traders: swing traders, day traders, people like yourself who are looking to, I assume, invest in this, looking to get in again. And all of those kinds of people would see this pattern and want to get in there, and that can give it the momentum to just carry right up into this little pivot area right up in here. So I think that would be ideal. That's what I'd be looking for, and that's a pattern that I would play to get in. So hopefully that's helpful. Is that pretty clear, Eli? Cool. Yeah. So then that's the sort of thing you want to look for. It's already had a decent move. It's probably up 12% or something from that low. Yeah, 12.5%, 13% in 4 days. Yeah, it's time for this to take a break. What's the ETR on this? Oh, let's see. Okay, this has got a long-term ETR, and this is like 6%. So 13% in 4 days isn't a ton, but it is a pretty decent move. So there's no reason this can't take a little break right here. It would be healthy. and it just sets you up beautifully for a nice breakout. So ideally, that would be what happens. Keep a really close eye on this over the next few days, and watch for some kind of pattern. Maybe there's a different kind of pattern that sets up, but you know, these things are not necessarily always perfect. All right. All right. I think I'm starting to lose my voice, so I'm gonna call it a day here. So yeah, I'll next week or next month. Sorry. Oh, you're welcome, Eli. We will continue to do recordings for the weekend briefings, and we will continue to do ticker talks every Wednesday at 7. It seems to work better for people, so that's good. And I'll get a calendar out sometime over the next few days. But I think we can expect probably either a ticker talk or a day off next Wednesday, a week from today. So hope you guys all enjoy your evening. And if you've been watching the recording, hit that like button and subscribe. And we'll see you all again soon. Thanks for coming out, everybody.
Take care, Kevin.